I lived through and traded the 2008 crash, saw all the repercussions of the recession, saw the areas where I made mistakes and the areas where, I killed it. And now bringing all that into what's happening now. And so really this is just kind of a broad talk of what's happening now on an economic level, where we really need to focus in terms of what's going to happen down the line, because there's some, pardon my French, there's some shit happening out there that people don't know about. And then really lastly, from a trading perspective, how do we make money from this? Because the nice thing about trading is it's a skill. You can make money in any environment, and so we're going to be talking about that as well. So let's dive into that. The world is upside down. This is some serious stuff. So we're going to dive right in. All right, so the markets are obviously fairly crazy right now, and you may not realize how crazy they are, and so we're going to talk about the insanity that is the markets. The main thing with something like this is that you want to be careful and not get sucked into the noise. And this is what I see mostly, is where people like overtrade, get overcommitted, and this is, although this is normal in a regular market, it happens in slow motion. Here it can happen hour to hour, and it can leave you feeling depleted, it can leave you feeling exhausted, it can leave you feeling scared, and in that frame of mind, you will make exactly 0 good decisions. All right, and so part of this process is not only understanding what's going on, but how to maintain a cool head and make good decisions. All right, because first of all, it's easy to make mistakes in an environment like this, but the main thing is that it's easy to freeze and be unable to make a decision, and that's where disasters happen. So one of my main goals here is to kind of show you some tricks that I've learned over the years to not only thrive in a situation like this, but to not get into that deer in the headlights mode, okay? Because you don't want to be in that situation. Yeah, and Tim, that's a good point, and I don't think I have that in the slide, but I'll add it. But hiding your P&L is actually a great trick, and I'll talk about that. And I don't mean hide like stick your head in the sand. Okay, so first of all, what's going on? And the first thing I want to do is compare this to 2008, because I lived 2008 minute to minute. We were doing a live trading room then. I was answering questions. I was convinced it was the end of the world. I bought, and this is a true story. Leading up to this, I bought 25,000 ounces of silver and 1,000 ounces of gold leading up to 2008. And I started doing this in 2005. Now, it was a great trade, but that was a lot of metal to have in your house. And I ended up selling it, and we bought a big house. I'll talk about the pros and cons of doing that. But then we want to talk about, you two, how to trade it. What is the Fed doing? What's safe here? Where are the opportunities? Okay, and let's dive in. Now, what's funny is when I sold this, I sold the silver. Of course, it went up to $50 an ounce. I sold it at 32 bucks an ounce, made a lot of money on it because I was buying it at 7, but it took me 3 days to sell it. And I had to have, I think Henry helped me pack it up. We had to drive, it was scary. I mean, that was a lot of money sitting in your car. And in retrospect, I could have bought 5 futures contracts, right? But anyway, we're going to talk about all this kind of stuff and what to do in an environment like this. Okay, so the 2008 recap. What happened in 2008? I think it's important to understand what happened in 2008 so we can then reframe what's happening right now, okay? So this began with the housing bubble. Let's see. My audio, okay. So this began with a housing bubble. It topped out in 2007. Yeah, we'll talk about why the metals are actually not a good idea here. So began with the housing bubble, which topped out in 2007 as no income verification mortgages essentially got out of control. By mid-2008, the realization hit and property values and other assets tanked as liquidity evaporated. Hint, if there's no liquidity in the form of readily available debt, all asset prices fall. That includes Bitcoin, Okay, that includes gold. We'll talk more about that. That does not mean that I don't like Bitcoin and that I don't like gold, but in this type of environment, in the short term, it is not a safe haven. Okay, we're going to talk about what safe havens are. Long term, I like them. Don't get me wrong. Don't get me wrong there. But keep in mind, we'll get into that. So as wealth evaporated and confidence fell, economic growth came to a halt, which started to lead to job layoffs. Layoffs continued well into 2009. Greenspan has said, as a scholar of the Great Depression, I believe that September and October 2008 was the worst financial crisis in global history, including the Great Depression. Of the 13 most important financial institutions, 12 were within 1 to 2 weeks of failure. I remember this because in October of 2008, I flew to Sydney, Australia to give a talk at the Technical Institute there. And by the time I took off in my plane, and 30 hours later when I landed, the Australian dollar had fallen 1,000 basis points. You know, it went from like 70 to 60 against the U.S. dollar while I was in the air. That's how crazy it was getting during that time. So the Fed and the Treasury poured trillions into the financial system to, quote unquote, unlock, because everything was at a standstill. Although they let Lehman Brothers go bankrupt, and my question there is who within Lehman Brothers pissed off the Fed? Because literally the Fed just let them fail on purpose. They did step in and rescue banks and the car industry. During this time, unemployment doubled to nearly 10%, with California and Michigan hit the hardest, and it took until 2011, okay, that's 3 years later, for corporate profits to recover. Only then did they begin hiring again. If you haven't watched the movie The Big Short, it is a very well done and entertaining movie that explains exactly what happened in 2008. So what did I learn during 2008, and what are the differences now? So in 2008, there's a couple things I learned. I'm going to make this short and sweet. First, I did hoard gold and silver. And was it a good trade? Yes. I was buying gold at $400 and $500 an ounce. I do collect coins. So I was getting like MS62 double eagles and as well as bullion. Long story short, this turned into a great trade. But what happened was first of all, I started getting paranoid that the world was going to come to an end. So I had gold, literally gold, bullets, food stores. And so it was fascinating with all this is that, yes, what I thought was going to happen came to pass. The financial system collapsed. But what I underestimated, and by the way,
reestablished.
Well, anyway, we'll get to that. What I underestimated was the willingness of the Fed to fire every bazooka in their arsenal at the financial system to keep it solvent. They did that, and everything survived. And I remember in October 2008, I think it was when I was back from Australia, it was at the height of the panic. And I remember going to Walmart, and there was long lines, and people were buying things like toilet paper and toothpaste, and what they were paying with was US dollars. And that really just hit me. It's like, okay, I've got all this gold and silver, but life goes on. People need to go to the bathroom. People need to eat, okay? And that was actually a really big aha moment for me. And I want you to remember that because, by the way, I do think that things are going to get pretty hairy here, but life does go on. And by the way, Walmart during Hurricane Katrina, if you guys didn't know this, they responded about 10 times faster than FEMA, all right? Screw the government. Walmart is doing more now to make sure that people have food and paper towels and toilet paper than anybody else on the planet. They're going to be faster than the government, okay? So don't worry about food shortages or anything like that. Walmart has us covered, all right? That's why they're up $6 a share today. So keep that in mind. So my gold and silver lesson was that, you know, I hoarded all this gold thinking it was going to be the end of the world. It turned into a great trade, don't get me wrong. But what I really learned was that life does truly go on. Okay, that was one thing I learned. The other thing I learned is that things get a lot worse before they get better. And the other thing I learned was that the ripple effect lasts a long, long time. And I think there's a couple of things that people underestimate in terms of what's happening now is the ripple effect and how long that's going to last. Okay, we'll talk more about that. But in general, and this is just a little bit of a different side note, is that it's really important. What I found in situations like this is just simply not to get stressed out. And I know that's hard because there's a lot of shit going on right now. But there's a saying, the Chinese have a saying that just says, may we live in interesting times. All right, these are interesting times. The most important thing you can do is, uh, take care of your friends, take care of your family. No matter what happens at the end of the day, there's going to be, food and paper towels available. Is the landscape going to change? Or some of your dreams going to have to be modified? Maybe, maybe not. But, it ain't the end of the world. All right, and it's important to remember that as the landscape changes. And we're going to get to the idea here. Because I can't, you can't believe how many people I'm talking to are like, oh, this is just a normal V-shaped bottom pullback, right? It's not. Okay, and it's also important to understand that. Okay, so what is this current market? Here's the thing with this current market, and I don't think anybody really realizes this. Maybe they do, but I'm not seeing that. This is the fastest decline in the history of the stock market. It is faster than 1929. It is faster than 1987. It is faster than 2000, and it is faster than 2008. Now, I obviously was not trading during the 1929 crisis. I can study charts. In 1987, I was trying to learn how to date cheerleaders in high school, and in 2000, I was trading. I had no idea what I was doing, but I was trading. And then in 2008, I thrived. It was a good environment. At this point, I had enough experience under my belt that I could handle it, and I'm applying those lessons and more to what's happening today. And that's really what I want to share with you guys. Now, in 2008, the top in October of 2007. Okay, from the top of the Domino's. I love that, Kevin. Domino's, Activision, Walmart, and Netflix. In 2008, from the top in October 2007 to the bottom in March 2009, that is 17 months, okay? 17 months. The market's declined 43%, okay? All right, here's the thing I want you guys to absorb. Here we are 3.5 weeks into this, and we are already down 30%, okay? 3.5 weeks, we are already down 30%. 2008, which was the disaster everybody always talks about, it took 17 months for us to go down 43%. This thing is happening faster than anything else that's ever happened economically on planet Earth. And I think that is important to understand and the implications of that. Yeah, now, Tim, you're right. We're down actually more than 30% now. This is an old stat because that's from like 2 days ago. All right, so look at this. I mean, and there's pros and cons of this because this is like a rip the Band-Aid off. So here's the NASDAQ, okay, and of course the NASDAQ 2000 crash was more pronounced. Here's the S&P. This sell-off took a year and a half, and I'm not good at math here, 1,400. I think this decline was about 40%. The NASDAQ was obviously more. That was where the bubble was. Here's 2008, okay, 42%. Look at that. And here's the tech. Look at what's happening right now. This is what I mean by this is the fastest decline in the history of the market. Okay, the 2000 crash, this was like both of the 2000 crash was like a frog in hot water. You know how the frog's in boiling water and at some point he gets used to it? It's like, oh yeah, we'll just buy the dip, buy the dip. Oh my God. Oh God, it's not working. No, this is all very much faster. Yeah, so what's the difference? Yeah, algos, okay, algos, volatility funds is driving this, and liquidity. So this is very, very different. This is very, very new. We are in uncharted territory, okay? This is more vicious than anything that happened in 2008, anything that happened in 2000, okay? That is incredibly important to understand because that will have implications into the recovery. All right. Now, real quick, for those of you that don't know, I know I recognize a lot of names here, but we got a lot of new folks. Again, I traded actively. So I've been trading since I did my first trade in 1987 as a senior in high school. I'm not going to go in. I'm going to spend 30 seconds on my bio and then keep moving. I've got this is in 2005, I did write a book called Mastering the Trade. This is the 3rd edition that's currently out. So again, I've been doing this for a long time. Just to let you know, this isn't my first rodeo. I didn't wake up last year and say, you know what, I think I want to have an online trading business. We've had a website and we've been posting stuff since 2001. There's other people I know out there that have a lot more experience than me, but I've got also just a lot of experience. This ain't my first rodeo. And so that's the first thing I just want to kind of let you guys know, is that I truly want to just kind of say, like, look, I've done this before. This is what I've learned that works, and I hope it helps. So that's on Amazon if you guys want it. I don't care if you buy the book or not. I just want to let you know that, hey, I've been doing this for a while. Secondly, I've been trading. I started trading about, my first child was born in 2005. You know, again, we started posting trades online in 2000, so 5 years before he was born. So I don't think there's such a thing as a work-life balance. For me, trading and life are the same thing. While I'm traveling, this is great. I did this trip to Africa where I'm explaining to him what I do for a living, and this is my son Dylan, who's heard the same explanation 10 times. He's like, kill me now. What's funny, though, is he loves trading. I do some events with Virgin Unite and Richard Branson. Yeah, I'd like to travel. Anyway, I like travel, family, and trading. That's my life. So travel, family, trading, and then and Simpler, which is essentially kind of like an extended family for me. So that's me. Okay, so this is a screenshot of my account at the market close today. Okay, and I want to say the proof is in the pudding, right? So as of today, March 17th, my overall P&L is $1.7 million. I started off, it's up 129%. Now, this market we saw in January, we had a nice up market. February was sideways. March has been down. It's been very steady all through that, and today we hit new equity highs. One thing I want to point out is, notice that my balance here is 2.4 million. As I was working on this presentation, and you can see the clock moving here, this is legit live, I got some signals on the futures, and Amazon's going up after hours. So I'm up, I don't know, what is that? I guess I'm up again. So anyway, there's signals happening all the time in this environment. So the question with this, I'm not, and there's a couple things I hesitate showing large accounts like this, because I know if you've got a small account, it can be intimidating. But I want you to think in terms of percentages. This is what I have to learn. And it messed me up, because at one point, there's a long time where I would have days when I was trading a large account, I might lose $30,000, and it would get me depressed, because I'm going like, $30,000, Jesus. That's like a teacher's salary or whatever. But you've got to think in terms of percent. Okay, so don't focus on $95,000. Focus on what percent of is that. And my goal is to make 2.5% a week. Okay.
Market data
so
connection
again,
lost.
I just want you to understand that. First, I want to show you this to show you that I have learned some things and they're working.
Data connection
and secondly, don't get too caught up in the actual numbers. It's more about the percents. So if you're trading a $24,000 account, then that would be the equivalent of making $950. It's the same thing. Oh, did I say 2019? Sorry, that's a typo. This is right now. That's a good point. So here's a live shot of my account. So it is today. Again, I've made some money tonight while I was working on my presentation, because the futures are moving. So yes, thank you. Let me, you know what? Let me just correct that. Well, I'll correct that later. So anyway, that should be 2020. Thank you for noticing that. Yeah, so the main point in showing you this is that, you know, this is not like, you know, ooh, look at me. It's just like, seriously, I've learned a lot of stuff. I make mistakes every day. I was trading today. I made like 5 mistakes trading today, but I was still able to make money. I could have made more had I not made mistakes. And the point of this is you can make money trading, make a lot of mistakes if you kind of have a game plan. And you know, this is not a game of perfection. You know, we're throwing grenades here, not horseshoes. So the question is what kind of trading? And really the essence of it is what I would simply call opportunity trading. So this is in Chicago. Yeah, so John G, thank you for posting that. And that's kind of what I've been hearing too, is that I'm going to talk about, there's some large funds like Citadel that are turning into the next long-term capital management. So yeah, no, thank you for sharing that. And if any of you guys are like insiders in the industry and you've got stuff like that, I always love hearing about that. My email is john@simplertrading.com, and part of what I do is I've been in the industry a long time, and I get information from a lot of sources, and I'm happy to kind of act as a what's the right word for that? I can't think of the right word, but I'm as kind of a terminal for that information and shoot it out to you guys. A good question. If you hit 2.5% by Tuesday, do you quit trading for the rest of the week? I don't, but I do. I'm cautious of that because I don't want to blow it. Okay, so the shorts answer here is I trade opportunities. Now, this is in TOS, you can do P&L by year to date. You'll see that I've made $417,000 in Tesla. Was that in one trade? No. Okay, I've traded Tesla probably 20 times, but for a while it was in play. Okay, Amazon probably 20 times. Peloton, that was actually just one trade, but it was a doozy. Spiders, NASDAQ futures, et cetera, et cetera. Now, I have losing trades too. I've lost 50 grand trading weed stocks. Okay, I lost 25 grand in Pinterest, et cetera, et cetera. So again, I don't want to give the impression that all my trades are winners. Far from it. The main thing here is the whole goal is you want to have about a 75% win rate, and you want your winners to be 2 to 3 times bigger than your losers. Okay, so I certainly lose money every day. And but I'm really good at cutting my losses and being unemotional about it. And I'm over the whole shame thing. Like, oh my God, if I lose money, my dad's not going to love me. Screw that. Just get out and move on. It's your job. But that takes time, right? So, okay, so this current market, it's the perfect storm. It's volatility funds, stock buybacks, and coronavirus all coming together. So here's what's going on here. Volatility-based funds started driving this. I just mentioned a note. There's two really big funds out there, Bridgewater and Citadel. Bridgewater is Ray Dalio, right? So you got Bridgewater Capital and Citadel, all right? So now this is this is Ray Dalio. You guys have heard of him. Now this is going to be a very abridged version of what's going on there or what I've heard, and I could be a little off on this, but just bear with me. So what they're doing is they're basing everything on volatility. So what they do is say, okay, bonds or stocks are 4 times more volatile than bonds. All right. So guess what? Their portfolio is going to have 4 times as many bonds as stocks. And that's going to apply to gold and all these asset classes. And what's been happening is the volatility has been increasing to the point where they got to reduce exposure. But what's happening is that liquidity is drying up. These funds, unless they're bailed out, I believe they're going to implode. I think it's going to be the next long-term capital. If you guys are familiar with that. They simply can't get out. This is why the VIX is at 80, okay? So volatility-based funds started this, all right? They started this. They depend on quietly moving markets, and they leveraged up to take advantage of them, okay? Short volatility, essentially short volatility has been the play of the decade. As the coronavirus hit, this turned up the volatility. Good question. Will Ray Dalio become poor? I don't know. I don't know how much of his net worth is in his fund. Long-term capital management went to 0, okay? As the coronavirus hit, this turned up volatility. As they started to unwind these positions, and keep in mind, these are huge funds, liquidity started to dry up, which made it harder for them to get out. When liquidity dries up, the 5% daily moves are the new normal, as it doesn't take much to push a market around. Okay? So this current market, in terms of lack of liquidity, this has to do on the institutional side. Without getting too complicated, typo, there is a massive shortage of US dollars. And I'm going to talk about the dollar here. This is the most important thing I'm going to tell you guys tonight. There's a massive shortage of US dollars in the world in relation to all of the obligations that are sitting out there. This means that one very big trade possibly over the next 3 months is to be long the US dollar. I will talk more about this. Euro and pound are in big trouble as they responded. Those countries responded late to the coronavirus. They are shutting down. Okay, I'm looking for the euro to go to below parity with the dollar, right? What does that mean? We'll talk about it. But the dollar is essentially the big horror show right now that nobody is aware of because everyone is focused on how to shore up businesses that are running out of cash. And we're going to talk more about that. In sum, currency trades over the next 3 months are the biggest opportunity on the planet right now. I will list out specific trades in terms of what is going on. Okay, so what does the dollar look like here? This is a monthly chart of the dollar. If you guys are familiar with my favorite setup on the planet, it's called the squeeze. There's a squeeze long, there's a squeeze long. Okay, this was a squeeze short. Here's the next monthly squeeze. A monthly squeeze when it fires typically lasts 8 to 10 bars. And you can trade this, by the way, without doing Forex, and I'll show you how. 8 to 10 bars, so a signal on this lasts 8 to 10 months, okay? That's after it fires. You can see here that when we fired here in the middle of 2014, the dollar went from 80 to 100. That is a huge move. When the dollar goes up, euro goes lower, gold goes lower, okay? All these things happen. In 2008, when there was a liquidity crisis, there was no signal here, but look at the dollar. This is why gold got killed in 2008. Gold miners was the absolute worst place to be. If you read doomsday newsletters, they're going to say, the world's coming to an end. You want to buy gold miners. That is the absolute, hands down, worst advice you're ever going to get in a situation like this. When there's a liquidity crisis, the dollar explodes. That's going to push down the price of commodities, okay? So I think the biggest trade on the planet right now is long the dollar. I will show you exactly how to play it. Now, again, I don't know for sure that this is going to explode. I'm just telling you. I've seen this movie before. The movie always ends the same way, and in this case, that's with the dollar going higher. So what are some low-risk ways to play that? All right, remind me about it. I will show you exactly some setups that I'm doing on that. Yeah, and Mark, and here's the look. Here's the easiest way to do this if you're familiar with it. There is a this is an ETF called FXE. That's the euro. Basically, if the dollar goes up, the euro goes down. So you can buy puts on that. And again, I will list these trades out. And then the dollar is UUP. So you don't have to trade Forex. You don't have to trade futures to participate. Okay. All right. So this current market now. I want to say first and foremost that although I've been researching the coronavirus, I am in no way, shape, or form a doctor or a pandemic expert. But I have looked at the papers that freaked out the government to put everybody on lockdown, and I do agree with them that there is a good reason that they're putting everybody on lockdown. This is a serious virus. It can screw up your lungs in a big way. And not spreading it is a very good idea. Again, I'm not a doctor, I'm not a pandemic expert, but believe it or not, I'm in agreement with what's happening right now in terms of people, we need to shut down and isolate and get through this until they can develop a vaccine. I've seen x-rays of people's lungs who get this, and it can take them, if they survive it, and again, the people that are at most in trouble with this are going to be elderly, already sick. Young people tend to bounce back from it fairly quickly. I've read cases of people that have had it, they get over it, in a week or so, but there's some lingering stuff going on in their lungs and blah, blah, blah. Again, I'm not an expert on this. I just want to say that the short version is I agree with the quarantining that's going on. The problem is, it's the problems that are I'm more here to talk about the economics, okay? So business and many industries, here's the biggest thing. In 2000 and 2008, this was a slow moving train wreck, okay? In 2008 and in 2000, I remember as it stretched on for months, 6 months in, 8 months in, we're gonna bounce back, we're gonna bounce back. It was slow. Businesses that went bankrupt typically did so in like 17 to 24 months. It took a while for things to kind of become clear, like, oh my God, we're not bouncing back. The huge difference here, okay, we already had a global economy that was slowing, okay? We already had a global economy that was slowing. While the US was doing fine, global economies were slowing. The problem this time is that some industries have stopped dead in their tracks. This is new. This has never happened before, okay? And the reality of it is that many businesses and industries do not have the cash to cover expenses while revenues are on pause. Many individuals live month to month. Many businesses live the month to month. And guess what? A lot of public companies got cute with stock buybacks. So either these companies are going to be smaller businesses like restaurants that live month to month. They cannot afford to be shut down for a month. They got, that puts them out of business. Or they're going to be larger businesses like McDonald's or Starbucks that spent all of their money on stock buybacks in order to quote unquote maximize shareholder value according to their data models, okay? And I'm saying that with disdain for a reason. They didn't need more than 2 months of cash on hand because the data models did not account for a pandemic. Now, to be fair, the data models probably shouldn't need to account for a pandemic, but in real life, is it a good idea to maybe have 6 months or a year of cash in reserve in case the shit hits the fan? Yes, it is, but there's a lot of public companies out there and private companies that aren't doing that, okay? So Starbucks is one of these. They have been essentially doing things where they're like, okay, all we need is 2 months of cash flow because we've got this much money coming in every day and we can use the extra cash to buy shares back. What happens if they have to close their stores? Okay. Now, I think at some point we might be able to pick up Starbucks for $10 and I think it would be a good buy. All right. I'll talk more about this in a second. There's no reason to buy stocks yet. There is no reason to buy stocks yet. What about Boeing? Dear God, this was a $400 stock a year ago, okay? They will not survive without a bailout. So companies like Starbucks spent borrowed money on share buybacks versus Microsoft and Apple, which have huge cash hoards on hand, okay? Look for bargain prices in Microsoft and Apple. Yes, they will go down with the indexes, but those will be bargains. You know, they're going to get to bargain levels. I would love to buy them. Many public companies manage cash flow carefully on a week-to-week basis to maximize shareholder value based on data-driven models. I call that horseshit, okay? That's when the quants take over and they're running things based in a fantasy land that nothing ever goes wrong, okay? Now we see where we are. This means that many companies purposely don't let cash build up and sit idle. They instead have all the models help them determine that they can get by with 1 or 2 months of revenue in the bank instead of having a rainy day fund. No one had a contingency plan of what will happen if we are forced to close this down for 6 weeks. To be fair, this is an unexpected thing. That is why this is called, by the name of the book, a black swan event, okay? We are in a black swan event. This is not it's a temporary dip type of a situation. Okay. Restaurants, leisure, casinos, Disneyland,
Trading
hospitality, airlines. These all account for 17 million jobs. Now revenue is halted as these industries literally shut down. Now, can they last 2 weeks? Yes, most of them can last 2 weeks. Okay, don't get me wrong. But what about 2 months? What about longer? Okay, if 2 weeks from today, the quarantines are over and everybody's out spending money again, the businesses will be fine. But the question is, what happens if this happens? What happens if we go for 4 weeks? What happens if we go for 8 weeks? I already know of 3 companies that are going to go out of business. Okay, they're not public companies, but they're private companies that employ 50 people, 100 people. They're going to be announcing going out of business within the next week or so. Okay, I don't know. That's probably happening all over the U.S. It's just that I happen to know a couple just from being like an EO and YPO and all that kind of stuff. When the casino is asking for a government bailout. Why? Because they spent all their money on dividends, even though they have negative cash flow. They've sent out $500 million in dividends to enhance shareholder value, even though they have negative cash flow, and now they're out of money. Guess what? The casinos are shut down. And many smaller employers in these industries, restaurants, et cetera, that aren't public are short on cash simply because these are low margin businesses that depend on continued business to keep the doors open. I'm an investor in a chain and about 8 restaurants in Austin. Not a lot of money, but like, hey, here's 50 grand you put into these different things. They're all shut down for the next 6 weeks. I won't be surprised if they go out of business. Yeah, this sucks. I mean, I feel for them. I am a huge supporter of small business, and this sucks, but we got to look at it head on. Okay, so long story short, I do think that someone was asking me today, well, this isn't 2008. That was a big factor. I actually think this is 2008, and it could be by a factor of 2 or 3. There is a liquidity crisis. Now, by the way, not every industry is going to be impacted. Zoom is doing great, okay? Netflix will probably do great. There are, industries like travel that depend on a large amount of people coming together. Yes, they're going to be impacted. I've had 3 trips canceled over the next 6 weeks. We were going to go down to Cayman. We didn't end up going, and they're closing down the airport there. I mean, so that industry is obviously hurting. Any industry with that is obviously hurting quite a bit. There's a pension fund crisis. The dollar shortage crisis is a monster. The coronavirus is a wild card. Currently we are hiding and many businesses are shut down. How long will it last? What will spending habits be once the fog is lifted? How many people will lose their jobs? Okay. And the main thing I want you guys to think about here, because this happened in slow motion in 2008, is the ripple effect. Okay. What's the ripple effect of one person losing their job, then not being able to pay their mortgage, okay? And then now the bank has that. Think of that times 10,000, 20,000, 30,000. In 2008, that happened over the course of 17 months. This is happening over the course of 17 weeks, okay? This is 2008 compressed from 17 months to 17 weeks. Yeah, it's the velocity of cash flow. Okay, so some industries are halted with a hard stop. Okay, we did not have that in 2008. Businesses just kept going until they could not eke it out any longer. Okay, so financially, how do we stay safe? This is a picture. If we were going to go to Cayman, this was how we were going to go and stay safe and make sure our kids were okay. So, but I'm bummed. So what's really crazy is my son and I, my oldest son and I, on March 8th, I think that was Sunday, March 8th, which I swear seems like 3 months ago, but that was only 10 days ago. We flew to LA because we had great seats for the Lakers-Clippers game, like courtside seats. And I think it was the last Lakers game that was played because the NBA season was shut down after that. We took masks. We took Purell. So now, it's just kind of like
market data.
It's insane that was only 10 days ago because it feels like 3 months ago at this point. Okay. Okay, so what do we do here? First of all, don't be a hero. Okay, and I love this. We may Sam or TG or somebody in the office, I think,
market data
this,
connection
says,
reestablished.
Buy stocks. No, you first. But don't be a hero. In this environment, if you are not an active trader, cash is king, okay? And I want you to think about the power of cash. Your financial advisor will always say, ooh, the return on that's only 0.5% a year. You should be in this and this and this, and that is horseshit. Think of this. If a house costs $400,000 and because of a recession falls to $300,000, okay, and you've got $300,000 sitting in the bank, your purchasing power increased by 25% just sitting on cash. That is how you got to think of cash. Cash is king. Keep in mind, in 2008, markets did not bottom out until March 2009 as the margin calls kept coming in, okay? Disney hit $15. Now, at some point, I would argue that it was a bargain at $40. But what happened, okay? Well, if you guys are familiar with Sid Bass owned 150 million shares of Disney. And when Disney hit $30, he used Disney stock to have loans on all kinds of oil stuff. And when the stock hit $30, he had to sell the stock to meet the margin call of all the loans he took out. That drove it down to $15, okay? That's what happens when funds and billionaires start getting margin calls. That's typically what's called long-term capitulation. That is still going to happen in the markets, okay? Selling begets more selling because of margin calls like that. That's what I mean. Be patient. We can probably be able to buy Starbucks at $10. Okay? So keep that in mind, okay? So, and I think we're going to get similar opportunities in this market to really load up on some long-term plays, but there ain't no hurry, as the first thing I can tell you there. We are not there yet. Sit on cash and be patient. Now, what if you are a trader? This type of environment creates a number of issues. First, option premiums are insane, okay? Insane. It just means that they've exploded. And it's hard, and the spreads are wide. So selling premium is even hard because the premium actually stays very high all the way up into expiration. So it's not like, oh, I'll sell this on Wednesday and buy back on Thursday. You kind of need to wait until it expires. All right, so that's an issue. Secondly, the overnight moves are violent. We're getting limit up and limit down moves overnight. You don't want to be trapped in that the wrong way. Brokerage platforms can easily get clunky and slow in a fast-moving environment like this, and news is coming out and impacting the markets all the time. It is not easy to get into trades, and it's not easy to get out of trades, okay? Yeah, you know, Gary, that's interesting because, yeah, my stepdad and Rainwater were friends. They went to high school together, so got a lot of interesting insights there. And yeah, Larry Ellison, he's margin stock to buy the island and all his houses. So what happens, you know, when the stock gets so low and they have to do that? One of the saddest stories of 2008, and there was a lot of sad stories. Do you guys, was it Green Mountain Coffee? So Green Mountain Coffee, and again, these are just ballpark, went from 150 to like 10, and the founder had margined all his stock to, you know, buy his dream, you know, essentially fulfill his dreams. It went to 10 because he was forced to sell all of it, and then from there it bounced back up and got bought by Coca-Cola, and he didn't participate in that because he got margined out. This is what happens when you load up on a lot of debt using leverage and you can't get out. Okay, so how do you trade this? And again, this is just from my experience and mistakes trading in 2000, finding what worked in 2008 after trial and error. And as you can see from my trading account, really capitalizing on the volatility that we're having here. So the question is, how do you do it? First, you do have to reset your mind. Okay, this is not, this as the saying goes, this is not, you know, this ain't Kansas anymore, so to speak. Things have changed, and it is critical to acknowledge this. As the saying goes, the skills that got you out of Egypt are not in any way, shape, or form the same skills that will take you to the promised land, okay? So first you have to reset. What used to be a 3-week move off of a daily signal is now a 1-hour move off a 5-minute chart. What do I mean by that? What I mean by that is before, where I'm just going to pick a stock, Apple. Apple might move $10 over the course of 3 weeks, okay? So you'd get in it off a daily signal, you'd be in it for week after week, you'd hit your $10 target, you'd get out and you'd be happy, all right? Apple moves $10 now in less than a day. That's what I mean by that, okay? Compression. So this is very huge and very important to